Welcome to Good Money Guide. Today we are talking to Simon Peters. He's a crypto analyst at eToro. He's been a crypto analyst for 5 years and he's been at eToro for 7. So I imagine over that time he's seen quite a bit in the roller coaster ride that is Bitcoin and cryptocurrencies. But today we're going to talk about Bitcoin, the Bitcoin ETF, which is particularly relevant because Bitcoin is touching on new all-time highs, in fact. So Simon, thank you very much for joining us.
Pleasure to be here, Richard.
Now, obviously, everything we discussed isn't investment advice. We don't know your personal circumstances. Everybody's different. Cryptocurrency is a very high-risk product. So before you get involved in the cryptocurrency market, make sure you've done your research and get professional advice. How's it been being a crypto analyst over the last 5 years?
In times like this, busy. So it has its ups and downs, like the Bitcoin price, I suppose. So the times where the price is going parabolic. Of course, everyone wants to know why the price is going parabolic. So yeah, it keeps me very busy in times like this. But no, exciting times. This is my third bull market now. So I joined eToro in 2017, just before the start of the run to 20,000. Saw the bear market, the collapse to I think it was in the low 3,000s, maybe even lower at that time. And then, of course, the next move up following sort of COVID and the halving to the all-time high that we currently have set at $69,000, and the next drawdown, and now we're back to potentially a new all-time high. So yeah, I've been through the wars, so to speak. But it's exciting to comment on crypto for sure.
Yeah, I suppose that's why they call it during your time in the trenches, because it's it's an absolute roller coaster. I mean, everything is great when there's a bull market, but as soon as the market turns, all the clients quieten down, all the interviews quieten down, and everybody starts to worry. But that's the great thing about the markets. There's always another bull run just around the corner, either in what you're trading or something else interesting to look at. But what we're going to talk about today is the Bitcoin ETF. It came to market to somewhat lackluster price action, didn't it? I think there were a lot of people thinking, the day that these main Bitcoin ETFs come to market, we're gonna see a big rally. But it was a bit of a damn script. But since then, Bitcoin has shot back up and it's trading, as I said, touching on all-time highs. So for those who don't know and the uninitiated in Bitcoin, can you just sort of quickly tell us what the Bitcoin ETF is and how it differs from dealing Bitcoin traditionally?
Yeah, so I suppose to take a step back and just explain what an ETF is. So an ETF is an investment vehicle that gives you exposure potentially to a number of different instruments and markets via a single regulated instrument. So the typical ETFs tend to just replicate the sort of major indices like the S&P 500, for example, or say the FTSE 100. So rather than having to sort of identify or pick out and have the individual companies within in the portfolio that you hold, you can invest in the ETF, and the ETF buys the underlying assets in the right proportions according to the index. In the case of Bitcoin, it's a Bitcoin ETF. Critically, it's a spot Bitcoin ETF, which means that the ETF holds the underlying asset, in this case, Bitcoin. So when investment comes into these ETFs, they have to go out and back it with the actual asset, Bitcoin in this case. So that's I suppose, where the excitement around these spot ETFs came from in the first place, is that the crypto community was anticipating that if we do see an approval of a spot ETF, and that would potentially open the doors for institutional investment to get on board, because there's always been this, I suppose, barrier, if you like, where because crypto is not a regulated asset class and there's various sort of complexities associated with holding Bitcoin and crypto, like managing private keys and wallets and being a custodian, there was always that sort of barrier to entry. But now that's been removed, the pipes are in place, so to speak, for institutional investment to get exposure to Bitcoin via a regulated instrument. The regulated instrument itself, the ETF, buys the underlying asset. Bitcoin is finite supply. There's only ever going to be 21 million, and of that 21 million, there's less and less actually floating around available to buy. So there was all of this coming together at the same time, And that's why the community was so excited for it to come and be approved, because there was anticipation of this price increase that we now eventually seen. Yeah.
Okay, and we'll get on to why it wasn't quite so well received in a second. But you've spoken a lot about institutional investors. Do you think? I mean, there's a massive barrier for retail investors getting involved in the cryptocurrency world. I mean, maybe the younger generation, aren't particularly bothered because they don't the mechanics of it quite there, but particularly me, when I've been reviewing cryptocurrency platforms or cryptocurrency brokers. In fact, one of the reasons eToro won best cryptocurrency platforms because it's actually really simple. Whereas for retail investors, it's quite difficult actually to invest in cryptocurrency, and also quite risky as well. So do you think it presents a great opportunity for the lay investors or retail investors to get involved in cryptocurrency as well as the institutional side?
Yeah, absolutely. Because you, in a way, stay within the current financial system, and with it being a regulated instrument, there's potential for it to be incorporated in the pension funds, SIPs, other tax-wrapped products like ISAs. So we haven't got to that stage yet, but the possibility is there. From my experience as an account manager here at eToro as well, because I do look after a book of clients here as well, there's always been this, I suppose, with crypto not being a regulated asset class, that's always been in some ways a deterrent, because if it was regulated, investors would feel more comfortable to buy Bitcoin and hold it. So now that we have this regulated vehicle, those that are perhaps a bit hesitant to get into Bitcoin, probably a better word than what I used previously. They have this regulated instrument now to get exposed to Bitcoin, whereas before they would have had to buy the underlying asset, which of course is not regulated, and you're not covered by the various financial protection schemes, etc. But the regulated instrument would be, if that makes sense. So
no, I completely agree with you. It's counterparty risk, isn't it? It's like if you buy shares or funds, if you're protected, no one can nick it. But if you buy Bitcoin and you lose it or whatever, you're stuffed. I mean, we used to do a lot of Bitcoin on Good Money Guide when regulated CFD and spread betting providers could trade it as a derivative, because of course your risk then was with the broker. So if you were long Bitcoin and somebody hacks the broker and nicked their Bitcoin, your position was your position was still safe. So I think being within that regulated environment is great for retail investors. But talking about the Bitcoin ETF, why do you think there wasn't a massive rally after they came to market? If you look on social media, you would have thought it would be going to the moon.
Yeah, I think it's a typical buy the rumor, sell the news is what we saw with the spot ETF. But a lot of it, from what's been circulating on crypto Twitter, was around Grayscale. So that's a bit of a background story. Grayscale is one of the ETFs that was approved, but prior to being an ETF, they were an investment trust. So they're one of the newly approved ETFs, but they converted to an ETF from an investment trust, whereas the likes of BlackRock, Fidelity, etc., they were newly formed from the offset. So Grayscale already holding significant quantities of Bitcoin, but being an investment trust structure, when we saw the bear market in 2022 and the price of Bitcoin fell to the lows of the sort of tens of thousands of dollars, GBTC, the investment trust itself, was trading at a significant discount to the Bitcoin price. And as the price started to creep up again, traders were able to arbitrage that or take advantage of the arbitrage opportunity. And
you don't see much arbitrage nowadays in any market. It's nice to know it's sitting here somewhere.
If you look at the GBTC, it outperformed Bitcoin in 2023 by 2 or 2.5x. But with it then converting to an ETF, that arbitrage opportunity disappeared because of the way ETFs are structured. They have a creation and share creation and redemption mechanism, which keeps the price of the ETF very close to the net asset value, which in this case is Bitcoin. But before, they never had that. So that arbitrage opportunity is gone. We saw a lot of unwinding positions. Also, Grayscale being one of the ETF, which has the highest fees as well. No doubt there's a lot of chopping and changing from Grayscale to other lower cost ETFs as well. So that took a bit of time to to sort itself out. We saw big outflows from Grayscale that pushed the price down to $40,000. But since then, we've seen pretty much day on day net inflows into these spot ETFs. And the amount of Bitcoin that these spot ETFs actually accumulate on a daily basis is quite extraordinary. It's fast outpacing the actual new issuance that comes in from the mining rewards. To sort of put it in perspective, 900 Bitcoin is produced daily from the block rewards. The ETFs are gobbling up anywhere between 5 to 15,000 on a daily basis at the minute. So they're fast outstripping the supply. In addition to that, there's also a sort of supply squeeze going on where 70% of Bitcoin in circulation is not being moved, hasn't moved in a year, and the amount actually available to buy on exchanges, or the amount in reserve on exchanges, is at lows not seen since 2018. So there's a few factors that have all come together at the same time, which is what's caused this significant price increase in the last few weeks. To sort of answer your question, or run up from 40,000 to 60,000 where we are today.
And where are you seeing those? Where are you seeing those inflows? What regions are you seeing the inflows into the ETFs?
Well, this is data taken from the ETF sponsors website, so you just see the actual holdings. And crypto Twitter is tracking this on a daily basis, so you can there's various accounts that are sort of tracking this and plotting how much the value changes and things like that. So it's all sort of public information that anyone can see.
Okay. Well, no, the reason I was asking is I was wondering if you could see it on your book from region to region, because obviously there's, it's a bit complicated for UK retail investors due to the unique way the FCA regulates the environment. We've got these on exchange ETFs that are there to supposedly make crypto investing accessible and easy for retail investors. But yet, if you go on one of the traditional investment platforms, you can't actually buy a Bitcoin ETF that's listed on a stock exchange. Could you just sort of quickly walk us through, why that is, and whether or not you think the regulators will change their position in the future on it?
I think it just needs to be approved by the relevant regulators, so that the FCA here in the UK and in Europe as well. There's various regulations need to be adhered to. So I think with the US, because they're US listed ETFs, they have to have a certain sort of documentation, a key investor document they call it, which I don't think they have.
So it's administration. It's a small. I'm not an expert on it. I don't know if
there's be a lot more to it than just administration, but it is that, from my understanding, from what I've seen. It's just the fact that these US ETFs don't have a key investor document, and that's one of the requirements to be to make those ETFs available to a UK audience in this case. So if they do, the likes of BlackRock, Fidelity, etc., do tailor it to a UK audience, then it opens up the door to the UK market to get exposure to these ETFs as well. I think at the minute,
do you know what I mean? To be fair, those key investor documents are quite important. I suppose it sounds quite boring, but I actually quite enjoy looking through them. Whenever we look at a robo advisor or a wealth manager, if you break down what they're invested in, or in fact if you break down what any fund is invested in, it's generally a lot of the same things, despite what they say. So I suppose having those documents is all part of providing a transparent marketplace. We've got some questions to ping to you from some user-based questions that I'll ping during it. But can you just sort of give us three tips on crypto investing best practices? So if someone who hasn't invested in crypto before was looking to dip their toe into their water, what would you say are the best practices for getting started investing in the crypto market?
Like anything, do your research into the project that you're thinking about investing in. Most crypto projects would have a website, a white paper on that as well. Look at who the team is behind the project, what are their credentials like, what's their credibility like. Initially, probably stick to the larger market cap cryptos, likes of Bitcoin, Ethereum, etc. In terms of actually buying as well, there's various ways you can go about that, but I would tend to stick towards a reputable firm like eToro, for example. We've been enabling investors to buy since 2017. Real crypto, been around a long time. There's others out there, of course, but do your homework on the company itself. And then it comes down to how do you want to custody your crypto, I suppose, as well, because the ethos of crypto is to be your own bank and self-custody, but with that comes risks. You manage your private key, or you have to secure your seed phrase to sort of back up your wallet. If you lose that, or if someone gains access to that, then that could be your crypto being inaccessible, or worse, being moved without your authorization. So
being
that's
nicked, basically.
exactly that. Yeah, exactly. But it's simple.
Yeah.
Being stolen and being unable to retrieve again and lost forever. So that is, of course, a risk to bear in mind if you're going to self custody. Most people tend to custody with a third party, i.e., like an exchange. But also, you have to be aware that if the exchange is what their credentials like, as I mentioned there, are they reputable? Do they have privacy in place? There's been some horror stories in years gone by where CEOs have sort of disappeared with the the sort of private keys to wallets containing all of the client crypto. So yeah, you need to do due diligence on the firm itself. Are they reputable? And so, like I said, is what option is best for you? Is it self custody, or is it being?
So how does custody work? How does custody work at eToro then? You've got two options. You can either leave your crypto. I mean, when I say crypto, I'm mainly talking about Bitcoin. To be fair, so let's sort of keep it on. Let's keep it on Bitcoin, because I think the further down the crypto scale you go, you end up in murky waters. I know you have a sort of process for what cryptos you allow on the platform, actually, which is another great thing. Actually, I remember talking to Dan, your UKMD, about that a while ago, and I think that gives people a bit of comfort as well. So what's the different options for people who want to trade crypto or invest in crypto on eToro? How can they keep their crypto safe with you guys?
So just going through the steps. So you open an account, go to eToro.com, register your details, deposit some money, of course, and then you can buy Bitcoin and either choose to hold that as a position within your portfolio, or you can sort of position, I should just say, is back one-to-one, and we hold the underlying crypto for you, cold storage offline. But you do have the choice of moving it to your own eToro wallet. So there's another app that we have called eToro Money that contains our crypto wallet in there, your own blockchain address, and you can move the crypto from your investment account to the eToro wallet onto the blockchain address if you like. And then from there, you can move to any blockchain address, whether it be your own self-custody or another third-party custodian. So you have a number of options available. It's just about what you feel is best for you.
Okay. And just before we move on to the user-based questions, how is volume on crypto on eToro for sort of crypto versus investing? I remember when I spoke last year or a couple of years ago, it was a huge percentage of volume. What's the split? What are eToro customers generally interested in trading?
It depends on what's happening in the market at the moment. I mean, I haven't seen recent figures, to be honest, but I'd imagine that the crypto, or the amount of revenue associated to crypto has gone up given the price rise that we have seen. But eToro is a multi-asset platform. As well as having crypto, we have stocks, real stocks that you can buy, stock CFDs, CFDs that you can trade on other markets like currencies, commodities. So it's not just crypto that we have, but it also really depends on the conditions in the market at the minute. If it's crypto that's doing well, then revenues from crypto can pick up. But if it's a stock like Nvidia, for example, that's doing well, then that can also contribute to
through the roof, isn't it?
Exactly. So because we cover all bases, we cover. We can do well out of any opportunity that presents itself in the market.
Yeah, that's great. You can see why it's going through the roof, though, isn't it? With AI, the way it is, whether you call it AI or the automation of what were quite irritating tasks, the processing power needed to manage all of these systems must be absolutely immense. So let's move on to some user-based questions. I'll just read them out, and then Kate, if you can just come up with some quick fire. Let's not dwell too much on each one, but let's just see if we can give some nice, quick, concise answers to some of these questions. So I'm new to Bitcoin and the whole cryptocurrency world. Can you explain in simple terms what makes Bitcoin different from traditional currencies?
Yeah. So Bitcoin is a peer-to-peer decentralized digital currency. So doesn't require any third party or bank. You can transact between anyone in the world across a decentralized network. The ledger itself is the Bitcoin blockchain, which you would have heard of. That's what stores all of the transaction and essentially lets everyone know what wallet addresses hold how many Bitcoin.
Okay. Do you think it'll ever be used to take payments in the same way as the Visa and a MasterCard network? Because my thoughts have always been actually as efficient as the blockchain network is, it's actually a little bit slow. Do you think we'll see payments at point of sale for cryptocurrencies
It's already
in the
happening.
future?
There's countries where Bitcoin is legal tender, and sort of emphasizing your point of it being slow. That's one of the, I suppose, arguments against crypto is that it doesn't have the sort of same transaction throughput that the Visa network has. But that is, I suppose, is being addressed through scaling solutions. For Bitcoin in particular, there's something called the Lightning Network, which is known as a layer 2, so it sits on top of the Bitcoin network. So it can handle a lot of transactions without clogging the underlying network, if that makes sense. So the best way to think of it is for our UK audience is like tapping your Oyster or contactless card when you're using the tube or public transport. You're doing lots of different transactions. You can do lots of different journeys, but it's only at the end of the day that all of that settles. It totals up and settles on your bank balance, if that makes sense, and you see the actual amount that you're due. It's the same thing with Lightning and the Bitcoin network. So you can do lots of different transactions across this Lightning network, and at the end of the day, for argument's sake, it will then settle with a final amount. So rather than having to record every single transaction on the Bitcoin blockchain, you can just record the final one of what the final balance is between the two accounts.
Right. With all the news about hacks and lost funds, how secure is Bitcoin really, and what measures can users take to ensure their Bitcoin is safe?
So I would, to answer your question, separate that sort of hacks and custody, I think it was you mentioned there, away from Bitcoin itself as a network. Bitcoin itself as a network is extremely secure. The overall, because of its decentralized nature, there's thousands of computers, supercomputers all around the world, known as ASIC miners, that are all contributing to the Bitcoin network and the security of it. The computing power is astronomical. So if someone was to do what's known as a 51% attack to sort of control the Bitcoin network, it'll be tens of billions of dollars that investment that's needed to go into actually doing this attack, and then you have to source all the computers. So it's pretty much impossible to do at this stage because of how mature Bitcoin is. So Bitcoin itself is pretty secure. It's the other aspect, I suppose, of managing your keys, exchange hacks, things like that, and that goes back to my point earlier, where it's about self-custodying correctly, making sure that no one, if you do self-custody, can get access to your private key, that you store it in a safe place. Think about risks that can occur in an environment as well, like fire or weather damage, things like that. So you have to secure it properly, not just scribble down on a bit of paper, for example, which can be lost forever, or on your USB device, which is thrown in the back of your drawer. You got to secure it properly, and make sure no one has unauthorized access to it. And in the case of exchanges, as I mentioned, if you are going to self custody with an exchange, ensure that there's a reputable exchange. A lot of them do also have like we do at eToro, principles of cold storage, store offline. There's vaults and things like that. So there's many security measures that one can adopt to keep their Bitcoin or crypto secure, whether it be on an exchange or third party custodian or offline.
What's the one thing you shouldn't do?
One thing you shouldn't do is just to take a snapshot of your private key and then put it on Twitter or something like that, for example. It's not very wise.
Keep it in your Gmail under Bitcoin
exactly.
password.
Yeah. Again, things like using 2FA authentication passwords, not having a digital copy of your your private key, which is, like it's in your email, for example. You got to take all these things into account, because if someone was, for whatever reason, able to take the device that your wallet was on, and that's probably another thing as well, is keeping a device that you have your crypto wallet on. If you are going to employ a hot wallet self-custody solution, don't have that on your main device that you're carrying around with you all the time. Keep it in a secure location at home, or wherever it may be, because if you lose that device, and that's got your wallet on it, and someone could potentially access it and move your funds. So there's a lot to think about self-custody, which is why most people don't do it. But at the same time, it's the ethos of cryptos to be your own bank.
Yeah, no, it is. It's a catch-22.
Exactly, yeah.
It's safer if you can hold it in the palm of your hand, but then if it falls out of the palm, if it falls out of your hand, then it's gone.
That's it.
Okay. I've seen a lot of discussion online about the environmental impact of Bitcoin mining. How significant is this impact, and are there any measures being taken to address it?
Yes, I don't think it's as prominent a topic as it was in years gone by. I think a lot of it has to do with China and the mining crackdown that we saw back in 2021. Before that mining crackdown, the vast majority of the Bitcoin hash rate or hash power, the overall computing power of the Bitcoin network, was concentrated in China, and a lot of that electricity was coming from non-renewable sources like coal, for example. But since that mining crackdowns happened, and the sort of computing power has been displaced to other parts of the world, those regions that have sort of taken on board the responsibility, if you like, of securing the Bitcoin network through their mining operations, tend to do so through renewable energy sources. So whether it be Iceland, for example, using geothermal energy, or in the US, for example, using hydro, making sure mining operations are close to dams or rivers, and using energy that way, and of course solar as well, in the case of sort of mining operations in the likes of Texas, for example, where there's a lot of sunlight.
Okay. Oh, that's really interesting. It's a lot about how the processing is powered. Okay. So we've sort of covered this one, but as someone curious about investing in Bitcoin, what should I know before getting started? Are there common pitfalls or misconceptions that I should be aware of?
Yeah, I mean, let's go back to the points we sort of raised earlier, is reading the Bitcoin white paper, and it's available online, only a few pages long, so do take the time to understand it if that is something you want to invest into. Of course, if you do want to buy Bitcoin, do so through a reputable company or exchange or broker, and decide how you want to self-custody. Do you want to do it yourself? In which case you need to have the I'd say a procedure or some sort of guidelines or understanding of how to do it correctly. If you want to trust a third-party custodian, then do your due diligence on who that third-party custodian is, and the actual measures that they take to secure your crypto.
And of course the volatility as well. I think that's a key thing for investors.
That's a good point. Yeah, I suppose.
Everything you see on social media is bullish. I haven't seen any social media content that is bearish. I mean, I've seen a bit, but the majority of social media content, and in fact mainstream media content now, it used to be incredibly bearish, but now mainstream analysis and coverage is generally bullish, which actually brings me on to the next one. Bitcoin's price seems to be very volatile. What factors contribute to this volatility, and how can investors manage the associated risks with the volatility in the Bitcoin price?
Yeah, so let's just speak about the volatility. Yes, Bitcoin and crypto as a whole is a very volatile asset class. It can go up 600% in a few months. It can fall then astronomically. In relatively speaking, 80-85%. We've seen drawdowns from the all-time highs. So that's something that I suppose comes with time of going through a few cycles to be what I'm looking for is to not have that emotion attached to seeing the price movement. In terms of what causes the volatility, simple supply and demand. As I mentioned, we have these ETFs now, which are accumulating significant quantities of Bitcoin, but it's not just ETFs, other parties that are out there buying Bitcoin on a regular basis and in big quantities as well. There's companies like MicroStrategy, for example, who have changed their whole corporate ethos about being a software enterprise to being a Bitcoin development company. So they're accumulating big quantities of Bitcoin, and of course you have a retail audience as well who are buying Bitcoin in anticipation of where it could be the price against the US dollar or whatever fiat currency in the years to come. So that's where the demand aspect comes from, but also the supply as well, where we have the block reward halving every 4 years, or 210,000 blocks. The amount that comes into circulation via the mining rewards is halved. So there's a squeeze there. There's the good old holders, people just holding their Bitcoin and not actually selling it.
70%, isn't it? Did you say 70%?
That hasn't moved in a year, yeah. So you can look at other hodl waves, as they're called, other time periods, and it's just getting bigger and bigger and bigger. That amount that hasn't moved in a year, or that amount that hasn't moved in 5 years or 10 years. So there's less and less availability of the overall circulating supply. So you have.
What do you think is going to happen when? What do you think? What do you think is going to happen when some of that Bitcoin starts coming back into the market?
Yeah, no doubt there will be some. Given if we do get to all-time highs or beyond, then there will be some selling. There'll be those that are falling very low, maybe realizing some profits, but also miners as well who need to fund their operations, and how they do that is just selling the rewards that they get from from mining blocks. So there will be sellers, but at the same time, I think we're at a level of maturity in Bitcoin where we have institutional inflows. Also, looking at the macroeconomic climate, there's more money circulating in the world than there ever has been. Look at COVID, for example, which was a massive step up in the amount of money globally. I think 30 to 40% of all US dollars in circulation currently were bought in COVID, if that makes sense. So there's a big jump up in money supply that could again make its way out from money market funds or accounts where they've been receiving high interest given the interest rates that we're seeing at the minute, and as they start to come down, that could flow into Bitcoin as well and push the prices up. So there's a lot of factors all coming together at the same time, which is causing this price increase that we have seen and could continue to see in the weeks and months to come and years to come.
Yeah, and everybody loves all-time highs, don't they? It's often quite a good buying indicator. But I think the important thing is small steps, especially when there's such a big float out there. Right. What about Bitcoin in other countries? How do different countries' regulations affect Bitcoin, and what trends are you seeing in terms of global regulatory attitudes towards cryptocurrencies? I suppose this refers particularly to the UK. Politicians are quite often saying we want to be the home of crypto, yet they don't let people invest in it. What are your thoughts on that?
Yeah. I mean, from the UK point of view, we want to make the UK, or the government wants to make the UK a crypto hub. The regulation has to come into play to allow that. But from what we saw last week, the government are pushing for regulation of stable coins, which are essentially cryptos pegged to fiat currencies or other stable assets. Looking to bring regulation in around that, and also crypto staking as well. So there are things happening which haven't had anything materialize as of yet. But also in other parts of the world, Bitcoin has become legal tender. The key country being El Salvador, the first country, I believe, to make Bitcoin legal tender. So you can go and spend your Bitcoin freely, like any other currency in El Salvador, whether it be US dollars or whatever it is. And I think that's going to be an emerging trend over the years to come, where, especially in high countries that are experiencing high inflation at this minute as well, I think we could see Bitcoin becoming more adopted. Likes of Turkey, Argentina, for example, just recently elected a new president who is pro Bitcoin and sort of anti-central bank in the current financial system. So I think the more politicians that are elected that have that mindset, then that can boost the adoption of crypto, or Bitcoin in particular, for becoming sort of a mainstream currency that can be used globally.
Okay. But what about, what are your thoughts on it over the next 5 to 10 years? Do you think that's likely to happen? Do you think do you think Bitcoin is likely to become adopted as an actual currency replacing fiat currency? I'm just
I
thinking from a disaster point of view. If you look at quantitative easing back in 2008 or whatever it was, and then you look at COVID, when basically the world coped by governments supporting the population and essentially printing new money. Do you think that's possible under a Bitcoin currency world or regime?
difficult to say, but I think we will see more and more countries adopt Bitcoin as legal tender. It's not going to happen overnight. Of course, it's going to take potentially decades for more and more countries to get involved and make a legal tender. But I think we could see Bitcoin run alongside the current financial system and used as an alternative currency, and possibly in the decades to come supersede it.
Okay. Yeah, it'll be that'll be an interesting one. Actually, I think there's a place in the world for both. But okay, so just if you there are thousands of cryptocurrencies out there. What makes Bitcoin stand out from the rest? And do you see any altcoins that could potentially rival Bitcoin's dominance?
Yes, so Bitcoin is the OG crypto. It's the first one that sort of became mainstream. It's the most proven, the highest market caps. That sort of sets it above every other cryptocurrency, in my opinion. Also mentioned about the network as well. The amount of computing power on the Bitcoin network at this moment in time is astronomical, and for a bad actor to actually control the network and do damage, the amount of cost that we have to go into that is massive as well. So it's I think at a level where the network can't be attacked. It's theoretically possible, in practical, it won't happen. But smaller networks are more susceptible to things like 51% attacks, or in the case of, I suppose, very new projects that have sort of gained prominence via like Telegram groups or social media, they can be rug pull scams or pump and dump and things like that. So again, do diligence on that as well. But I think Bitcoin is the OG. That sort of is illustrated with its market cap, but it is limited in its functionality and what it can do. And there's things like Ethereum which have more use cases and opening up smart contracts and things like that. So again, that's another one to potentially have a look at.
Yeah, that was one thing I was going to bring up actually. So Ethereum does have a use case. There is a point to it, but I sort of get why Bitcoin is so popular, but I can't see the point in it as anything other than an alternative to something that exists. Is there a real use case like Ethereum has for Bitcoin, or is it just an alternative coin?
It is happening. So Ethereum was obviously stems from Bitcoin, and has added functionality allowing for smart contracts and the running of decentralized applications, and it's built a whole ecosystem around that. Bitcoin is sort of reverse engineering that, where it was initially designed as a peer-to-peer currency, but is now sort of starting to introduce NFTs via ordinals, non-fungible tokens. So that could be something in the years to come as well, as tokenization of assets. So where we're, for example, with property, we're going through a central ledger at the minute with the housing registry. That could all be tokenized and put onto the blockchain and done in a decentralized way, and make transaction of property a lot quicker and a lot more cost effective as well. So there's lots of things that can happen in the future with the likes of Ethereum.
If
Bitcoin is sort of catching up.
If Bitcoin can make the process of buying and selling a house easier, I think everybody would adopt it. If you talk to anyone who's ever bought or sold a house and go, oh no, just do transacting in Bitcoin and then go through straight away, I think that would be a fantastic use case. Let's have a look. What impact could Bitcoin and cryptocurrencies have on the traditional banking and the overall financial system? And I don't think we need to answer that. I mean, we'll skip that one. Beyond finance, how might Bitcoin and blockchain technology influence other sectors like healthcare, governance, all the art. I mean, we just touched on how it could potentially improve property transactions, but any thought on the arts or healthcare, for example?
Well, we all think with healthcare, medical records, at this moment in time, they tend to be stored on a centralized database, whereas blockchain is decentralized. So if you think of from a network point of view where it could be susceptible to an attack, a centralized system is, with by definition being centralized, more open to being attacked, whereas a decentralized network is not, because you can attack one node, but there's many others to step in, and they all hold the ledger as well. So that could be something that could be very widely received in healthcare, and also it's immutable as well. So once it goes on the blockchain, you can't remove it from the blockchain. So that's another attribute that blockchain has versus centralized systems as well.
So you're saying that medical records could potentially be more secure on the blockchain than in a sort of
because
government,
if
run.
you had centralized records, the centralized systems keeping medical records of every person in the country, and that was attacked or interfered with somehow, then that puts us in a very precarious position. Whereas a decentralized network, with obviously the ledger being spread around so many different nodes, is less susceptible to sort of attack like that. So that's where it has an advantage, in my opinion, versus
Okay.
versus
And what do you think the biggest barrier to entry is when it comes to the population adopting Bitcoin?
I think it's just from people I've spoken with. It's just the general understanding, and I think when you don't understand something, there's a fear that you have towards it. So take the time to understand what Bitcoin is and what blockchain is. All of this terminology, I appreciate it's new for a lot of people. So do your research first, and as you sort of increase your knowledge base, hopefully your level of comfort increases as well.
Okay, and let's just talk about ethics. So last question here. So ethics. Are there any ethical considerations we should be aware of when it comes to Bitcoin, especially regarding its use in illegal activities?
Yeah, again, with crypto, I think you have to separate the illegal activities away from Bitcoin. Bitcoin is just a network. Illegal activities can happen regardless of it being crypto or fiat currency or gold or seashells, whatever it may be as a medium of exchange. Illegal activity can happen. So I wouldn't just paint Bitcoin with that brush, because it's going to be applied to every other medium of exchange as well. I would actually also say that because Bitcoin is a public ledger, yes, you don't know who the holder of the wallet address is, but you can see all of the transactions that are going between addresses. That's public information. So if you were to be able to identify a bad actor and tie them to that address, you could see every transaction that has gone to that wallet and what they've sent from that wallet as well. So that could help authorities in a much better way than dealing with fiat currency, for example, or gold.
Yeah, I remember. I remember reading about that in. Did you read the End of Money? It's a New Scientist book. It's brilliant about
no.
it's a great book, and I do read that, and that was one of the standout things from it, is that Bitcoin's one of those current cryptos that's often associated with people are just paying for nefarious things with it. But actually, you are right. In some respects, it's easier to track than sending dollars or gold. What about you? Do you dabble in crypto yourself?
We do, yeah, eToro, yes. So for us, being analysts as well as myself as an account manager, we do have accounts on eToro where we are given money by the company kindly to invest in assets on the platform. So cryptos, stocks, CFDs. But yeah, given my, I suppose, role at eToro covering cryptos, only right that I do have some crypto. So yes, I do.
Yeah.
I do.
No, you got to put your money where your mouth is.
Yeah, you got in the game.
What's been your best trade? Have you had are you a long term holder of it, or do you dip in and out?
Yeah, so to be honest, I think when I got into eToro and crypto as a whole, you hear a lot of conversation around crypto being the future of money. And I think to understand what the future of money can be, you have to go backwards as well and understand where we've come from, and how money has evolved to where we are now. So with fiat currency, and coming off the gold standard, the supply is free to increase as much as it wants to, and inflation's only going. Well, I'll say inflation. The price of goods are going higher. So even though inflation could be coming down, the nominal value of goods is still going higher, and your purchasing power is being decreased. So, and with Bitcoin being a scarce asset, only ever going to be 21 million. Look at the principle of supply and demand. If there's more money in the world and that's all chasing a scarce asset, then in theory the value of the scarce asset should go up. So that was my reasons for getting into Bitcoin and other cryptos just from there, just down to use cases and how it sort of differentiates yourself from Bitcoin, and how it could be adopted globally, and sort of key things like that.
Okay. All right. Well, brilliant. Look, Simon, thanks for all your insights there. I hope that has provided some helpful information for people who who haven't invested in crypto before and are thinking about making a leap. So, Simon, thank you very much for talking to us, and hopefully we'll chat again in the future.
Yeah, thanks for having me, Richard.